Welcome back. Netflix earnings are out tonight with some investors keyed in to one critical question. Just how many subscribers or subs does the streaming giant have? The Street hoping for 4.5 million new ads this quarter, and alongside, of course, the performance of its new ad-supported tier and in-house content. Now, we have Allie Canal here with more. Yahoo Finance's own. Allie, what are we expecting?
Yes, and this is going to be an important quarter for Netflix to really set the tone for this new year. Because if we remember this place last year, 2022, we started the year with 2 straight quarters of subscriber decline. So Netflix is really going to want to come into this with a position of strength. Investors are going to want to see some updates on Netflix's profitability efforts, which does include their recently launched ad-supported tier, along with a crackdown on password sharing. However, analysts have told us that investors are going to have to play the long game there. It's likely that we're not going to see the full impact of those efforts in this quarter, especially since the ad tier just launched in 12 markets in November. However, we have received some third-party data that shows ad-supported subscribers make up about 12 to 15% of that global gross subscriber base. So perhaps we'll see some more color on that earnings call later this evening. Let's just go back to those numbers real quickly and what we're expecting from the Street. Revenue expected to come in at $7.85 billion, adjusted EPS 58 cents a share, and as you mentioned, Jared, those subscriber net additions 4.5 million, and that's something that Netflix has guided as well. However, some analysts are upping and boosting those subscriber expectations due to the fact that we saw some pretty solid content this quarter, record-breaking content from Wednesday, Glass Onion, Troll, the list goes on, and we're going to see continued content improvements planned for this current quarter as well. So while those subscriber numbers, it's not the be-all, end-all anymore for investors, they are really focused on profitability. A subscriber beat would be a huge win here. And real quickly on the revenue front, we know that the strength of the US dollar has been a big pain point for Netflix. However, that dollar has been weakening a bit, so we could see some positive momentum there for both revenue and operating income. And then finally, just take a look at this stock price, because Netflix stock has been on a tear in recent weeks, recent months. It's up about 8% year to date, up about 60% over the past 6 months, and it's far outpacing the NASDAQ Composite's 0.5% gain on the year. So we'll have to see if that upbeat stock can continue after earnings.
All right, you mentioned all of those key titles. Let's talk about their spend, because the billions of dollars that go out the door with regard to just creating some of those names that become household titles, whether in movies or series. What do we expect to hear on the original content spend front from Netflix?
So Netflix has guided that they're planning to once again spend around $17 billion this year. So even though it's roughly on par as what they spent last year, it's still important to note that they're not increasing their spend, because Netflix really was the pioneer in this. They just constantly wanted to pump more money into their original programming. We saw a lot of other media giants, a lot of other streamers adopt a similar type of strategy. Disney, for example, spends around $30 billion in content annually, but we're seeing a pullback across the board. Again, all going back to profitability. We will see if there's any updates. Maybe they'll lessen that spend over the years, but I think that 17 billion number is probably the one that's going to stick. But right now, I think the content slate has improved. I think that's going to help with subscribers, help with that newly launched ad tier. I'll have to wait and see.